Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 11th, and we are here to wrap up the week. Hey, Peter, Jaya, Dagon's in the house today, Mark, Marco, and Mohammed. Great to see you guys all here. Tom, great to see you. Aurelian, Dagon, cheers, mates. Great, always a pleasure. So, got to cover the whole lot today. Okay, so bear with me. The equity market sell-off, obviously, that we've been seeing or that we saw yesterday is of great interest. It's stoking a lot of questions on whether it's the beginning of a larger, basically, correction in the markets, or if this is just a simple sort of algo-driven drive. Whatever the case may be, the levels in FX haven't necessarily transferred over. So last night you saw I highlighted Aussie yen, typically known as a risk sensitive pair. Obviously that followed suit pretty well yesterday with the decline, but we have some major levels on hand to look at. So we'll start off with the DXY as always. Dollar yen, euro, and Aussie yen from yesterday's update. We'll go ahead and hit dollar CAD. It made it through. Dollar CAD's just on my bad side right now. I've been looking for a move lower. You guys know we've been following that. The rebound took us through the highs, even took the pitchfork resistance out on this last stretch. So not really touching dollar CAD right now, kind of neutral on that, but we'll take a look at the levels. And then the pound crosses, pound dollar, pound Kiwi, and pound Aussie, all on the menu. And then we'll circle back and take a look at gold and crude prices and a quick glance at euro yen, the SPX, and the TNX. Don't really have to look at the TNX per se, but just looking at this chart, guys, I wanted to remind you to keep an eye on this into the close of the week. This is the yield on the US 10-year note. And certainly we've been talking about this 328, 332 level as a critical juncture, absolutely paramount for the yields. We haven't quite gotten there. You're seeing that we did tag slope resistance or the median line here this week, or last week rather. But just a really important thing to keep an eye on. Everyone's talking about the yields, and certainly with everything that's happening in the dollar, something worth watching closely here. Okay, watching the U.S. Open, or the U.S. close rather, this week. It's gonna be absolutely critical to see how this ends up closing out the session. Hi, Iman, great to see you in the room. Appreciate that. All right, so that's all I'll say on TNX. We'll just put that as number one. Watch this into the close of the week. We're at resistance, not surprised, we're looking for exhaustion. Dollar looks like this. So this is the weekly chart. You guys remember we've been talking about that 96.13 level, the high week close for the year. On the update that we made back here on the 9th, this is just a major level that we were looking for failure on a stretch higher. Okay, and this was even ahead of NFPs. On a stretch higher, we're still allotting even a stretch into 96.98 for exhaustion. Truth be told, you have a lot here. This is the 200-week moving average. Since we broke below back here in August 20th, late August, we haven't been able to close above it. Again, the high week reversal close, 96.13, and the 50 line, this is a 38.2 line if I'm not mistaken. Yes, the 38.2 line of the pitchfork was support, break, acceleration, resistance, real clean. So finally getting some play here on the DXY. Daily chart, we had that move failure. We spiked up above 60 momentum, but still a decent failure call there. Okay, that's the high week close again, 96.13. We probed a high yesterday at 96.16, or excuse me, on the 18th here, or the 9th rather, right into that level before gapping lower. So look, this is the first major support structure that we've been talking about. You're looking at 94.96, excuse me, that's the 618 of the July advance, and also slope support. Okay, again, you guys have seen this all before. The slope is derived from just these two reference points. Resistance, break, acceleration, support, break, acceleration, support. Now, if we have a material, let me take a step back. Some major key levels that are very close, okay, in the DXY as we close out the week, things to watch for. Obviously, 94, 96 is the level we've been talking about. So watch that. More importantly, also you have the 100-day moving average. Okay, currently comes in like 94.85. Then the 618 of the advance just from the September lows is 94.71. So watch this whole region, guys. I wouldn't be too surprised if we do see some sort of rebound, but larger story, that's what needs to get out, to give way rather, for the next leg lower. Bigger target for me is going to be this pivot that we've been looking at in price. This dates back to the last year. That converges on a parallel that we added yesterday in the webinar, right? Of the same slope, parallel off these two highs, 1 touch, 2 touch, 3 touch, acceleration, support, support. That converges on that same pivot, and that's like 94.27. Little rich for now, right? It's a little aggressive to be even looking at that right now. First things first, watch for a near-term reaction off one of these two levels. Again, the 100-day moving average, if not the 618, to offer some sort of rebound, but that's still the level we want to clear. Ultimately, we are looking for a downside break of that. So really, really critical levels here for the DXY heading to the close of the week. Here's the intraday chart. All those same levels are mapped out. No change to any of the targets from earlier in the week. Again, there's the daily chart. We've simply held this resistance. We're moving lower. Here's the intraday picture. Here's the weekly opening range just below the high week close. Here's the weekly range break to the downside. It's Thursday. You look for a Thursday, Friday low. So again, you know, ultimately we are looking lower, but wouldn't be surprised to see a rebound off one of these two levels. Okay, 94.71 is that 618 we just looked at, 94.96, and in this range also sits that 200 or 100-day rather moving average. Here, let's add it in, shall we? Right around here. Oops. So I'm just measuring the crosshair with this section here, guys, to make sure I'm on the right note. And that's going to be the 200-day, or the 100-day rather. So this is the zone to watch for. It's a big zone, I know, guys, not favored position to have such a big zone that we're watching, but there's just so much lined up there. I really do think it's worth you know, easing any short positions that you have immediately onto this stretch, but also have clear conviction on the downside break. Also keep in mind one thing, right? We try to get as objective as possible, as many factors to support our opinion or our thesis. And this break here that we're looking at today would also manifest a objective break of what? Of the monthly opening range. Here's your monthly open. Here's your monthly open here. This is the actual open price. We still haven't closed below it today. We'll have to see how that materializes. But the monthly range lows is right here. What is it? It's actually 95 on the mark. 95. That's your opening range low for the month. So just adding further evidence between 94.71 and 95, watch out. Okay, ultimately, like I said, we do want the downside break, but near term, that's the level, that's the key barrier we need to get through. Okay, any questions on the DXY or anything like that? Dollar is weaker against all its major counterparts heading into the US Open. You have Aussie's biggest performer up 0.57%, Kiwi up 0.54%, Euro up 0.45%. Yen is virtually unchanged so far in the session, so we'll take a look at that next. But dollar's got some trouble if it gets below 94.70. Watch this key support zone heading into the weekly close. Okay, next up, that's number one. Number two, dollar yen. Looking clean, finally getting the turn. So here's the dollar yen on the weekly charts. Here's dollar yen last night. Okay, we're highlighting this major slope line from 2012. It's been messy this year, I'll grant you that, but we've had so many tests of it. Okay, there's the low, 2, 3, 4 touch. Again, like I said, this year it's kind of been messy, but look what the low we just scratched into so far. It's right there. So look, we're breaking back below the yearly open. 2018 open is 1265. Look for near-term resistance there. Weekly chart is pretty telling here. So not much new has changed on that. Daily chart looks like this, looking for 1176. That's just a major, or that's just a basic pivot and eyeball there for the lower parallel for the daily chart. Here's what that looks like. Okay, little bit lower. Think you could scratch is 1175, just a pivot in price, right? So really clean moves off of the upper parallel here. This is the 38.2 line, if I'm not mistaken. Yes, I'm on point today. There's the 38.2 line of the pitchfork. Really nice resistance break back below. There's that key pivot we were talking about for so long, 113.08, 113.27. That's still key resistance now. Okay, and this is sort of what we're playing in for dollar yen. Here's the dollar yen near-term charts. Okay, so same levels that we've been following since earlier in the week. This is what it looked like earlier in the month, rather, last week. Remember this? We highlighted this channel. We said, let's look for a reversal off this, maybe a scratch into 1475, but we're basically looking for exhaustion off one of these two levels. This is the break that we need to materialize to give us the shift. Here we are a week later. We got the break of the channel support. We got to drop into this zone. It got stuck there for a couple of days, but there's a consolidation, break to the downside, boom. 50% retracement, which converges, is that 50% on near-term downslope. Might see some trouble here. So here's what we talked about last night. Talked about 1216 being next downside target. Again, little bit near term, could see a rebound off that. I see some hesitation. You want to drop near term resistance again to 1265, the early open. Bullish or bearish inval is now back up at 1327. Last night I left bearish inval up here at the weekly open. I would drop that down this point, guys, in time and where we are in slope. I'd leave this as our bearish inval. So 1327 as opposed to the weekly open at this point. But no change to any of the levels. So if you're in a short, this is a good spot to take some off the table. I'd put stops back above 1265 rather. If you're looking for fresh entries, I wouldn't get cute on trying to play a rebound, although I do think it does bounce. But I would be looking to sell that, okay, for that final push into the lower parallel. Keep in mind that comes in like 1170 rather at this point. The 618 is down to 1160, so it's 10 pip region. Next major key level for dollar yen. Any questions on dollar yen? Very interesting, okay? And watch this whole move with the yields and how that performs. Again, typically a decent correlation with the with dollar yen, but the levels are clear. All right, Eman says, I'm long euro from 115.40. Need highlighting levels for me, please. It's always appreciated. Thank you, and more than welcome, Eman. Let's do that next. Euro dollars number 3. So, I love it. What a level to rebound off of. So we've been talking about this for a while. It finally materialized. Again, patience pays sometimes in this business. Here's the euro dollar update from the 3rd. Again, this is from, or the 8th rather. This is earlier in the week. Here's the weekly chart. Look at this. Look at the response we got. So the low week reversal close for the year is 1436. That was our line in the sand. We needed to see support ahead of that. If we saw a break there, your risk going to drop all the way down to the 113 handle essentially to hit that slope that we rebounded off of earlier in the year. Look, this is a beautiful response. Okay, really nice move. Daily chart looked like this earlier in the week. We were coming right into this near-term confluence region, which is why I wanted to see the hold. In classic fashion on a major trade like this, your market slipped a little bit lower, grazed these lows, and then reversed. And here we are with the rebound on the weekly chart. Here's the daily chart for euro. Okay, slipped just below. Okay, 1436. Here's the rebound. The first major resistance hurdle is approaching nearby. It's basically, look, there's a couple. Let me say this: the weekly or the monthly open comes in at 1617. Write that down. Know that. 1624 is the 50% retracement of the near-term decline. So now you're talking about 1517. Or 1617 into 16 into 1624. Okay, and then just above that is the 100-day moving average, and we'll call that like 1628. So you're basically giving yourself like a 20 pip range of major level resistance, 1617 to 1628, clustered with technical considerations. My problem, E-man, is right ahead of that is this basic slope here. Now, I don't want to go crazy. This is the 618 of the pitchfork off the yearly lows. I had moved it because this worked, but at this point, yeah, no, we'll stick with it. So right ahead of that is that slope, and that's like 1605. So I just wanted to highlight there's a little bit of a clustered region, not too surprising, as we just looked at the DXY with its little clustered region of support too, right? So watch this region of resistance. All three of those levels are levels I would watch as near-term targets to peel off some of that long position that you're in. E-man, you gotta you're long from 1540, so you're a little 50 pips up in the money now. That's pretty good. Yeah, watch all three of those levels. Here's the near-term chart, the scalp chart for euro dollar. Okay, that pitchfork that I highlighted, we're basically testing that right now on the resistance side. Here's what we highlighted last night. Oh no, this was earlier in the week. Here was last night. Okay, first level is 1563. I was concerned if this was a correction, that's where we would see failure. Great that we didn't. Took out 1578, and here's the upper parallel. And again, there's that parallel that we just talked about on the daily chart, right? So everywhere in between here, there could be some sort of near-term exhaustion failure. So Eman, a good place, again, peel some off. Okay, you're basically trading into this parallel right now. Let me bring this into 120 minute to match what I showed you last night. Here we go. Okay. So boom, boom, upper parallel, could see some near-term weakness. You want to bring up your levels at this point. Bullish invalidation. I'm going to bring up to the weekly opening range high. That converges on the 2016 high close, a level that we've been highlighting anyway at 1530. That's new bullish inval. Interim support, 1560. Next upside targets, like I said, it could be, you know, this slope comes in at like 1605. We just talked about that. 1623, 1624 is the 50% just of this near-term decline. Then again, that 100-day moving average comes in. Yeah, pretty right on, around 1630. All right. Now remember one thing I always note, guys, if we do see a breach of upslope resistance, typically that can be the sharpest part of the move. Seeing as how we're already, you know, 1.4% off the lows here, I'd be surprised, let's just say that, to see this breach on the first attempt here, but just know that that's the case. So if you're holding longs, a good spot to bring up your stops, go break even or better, you know, maybe a stop below 1560. Eman, if that's a short-term position, would be locking in 20 pips for you. But broader picture, we've been looking for this and we are enjoying it. Okay, 1624 is the next major level. All those things are lined up. Your monthly opening range highs, your monthly open, the 100-day moving average, and the 50% retracement, all right here. Make sense, E-Man? Does that help? Hi, Michael. If we look for fresh entry on the euro dollar, how do we approach it? Uh, says Mohammed. So for a fresh entry, if you're not already long from here, your ideal scenario, Mohammed, would be sort of a near-term correction off this level. And seeing as how we found support along the lower parallel, basically a median line hold would be the best case. So if it were to drop down again, I don't think you'll get this drop, just as a disclaimer, but if we get this drop near the median line, 1530s, again, that would be sort of the ideal scenario. On the initial approach right now, if we pull back and hold above the 50 line here, that would be an entry I'd be looking for against that low to play the breakout. Let's look at this near term. Here's the 60-minute. Here's the 30-minute. Okay, just a little bit of an adjustment there. Okay. So you look for something on the near-term slope that'll give us a tell. Here's the slope off the weekly opening range low. Here's your weekly open. Here's your weekly opening range break. So again, we're looking for a Thursday, Friday high. It's your first attempt. This slope off the lows here is 1 touch. 2 touch is just speculative. 3 touch confirms. So that near term. Okay, I'd be looking at these highs here. And that would give you this as sort of an ideal spot for entry. Okay, so levels still are unchanged. 1529 is still your bullish invalidation. If we break back below this, it certainly would invalidate some of the near-term indicators that have given us the long bias. But near term, these are 2 levels of interest to see if you get failure. 1563, just a soft target, more so this slope line, which converges on Friday's high near 1549. So near-term levels, if you get some sort of exhaustion, you'd look for failure there. Remember, it's not like a swing trade, Mohammed. So when we're intraday trading, we can't just put a limit there and hope market gets there. We have to see how price is actually reacting there, right? And something in near-term momentum, a trigger, something needs to give us a session opening range break. Something needs to give us the tell. Make sense? Iman says, yes, you covered it all. Thank you. Hey, you're more than welcome, Iman. Good luck on that. Nice entry. So that is euro dollar. Mohammed says, yeah, thanks. You got it, sir. So that is euro, number 3. Number 4, and interestingly enough, Aussie yen is one that we've been covering over the last few days. Let me just clean this up here. Nice trade on the euro. That worked out nice. Okay, what is it? Aussie yen. Here's Aussie yen. So Aussie yen was a very nice trade because we were looking to play the downside after that reversal off of slope resistance last week. We talked about that. We've been following this on the intraday charts. Basic support, 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 break. That was your first resistance touch. There was 3 attempted breaks on a weekly standpoint. Failure to push through that. Here's the pullback. Yesterday, and here's the trigger hold, by the way, on the weekly chart. That was one thing as we were rebounding back above that parallel. We said, look, if it gets back above this and the trigger breaks on a weekly close basis, at that point, we have to respect a larger rebound. But guess what? Real nice hold, right? In the weekly standpoint. Iman says, since last week, you were saying if we go through 1530, it will sail to 1583. We did it today. Yeah, we did, right? Yeah. Hey, sometimes it's better to be lucky than skillful, right? So Aussie yen, I digress. So, last night, like I said, we went neutral, okay, because it came into the last of our targets. And that last level was 79.12. So take us back to the daily chart real quick. Give you a quick look at what we've been looking at with Aussie yen, but 79.12 was the final support target that we highlighted last week, okay? And that was this confluence region here. Not a major retracement, right? It's an 88.6 retracement, which tends, again, I don't know why, the 88.6, retracement tends to work really nice on the commodity currencies like Aussie, Kiwi, CAD, Don't know why. It's just a weird phenomena. But I digress again. So here's basic trend line resistance, breach. It converged on that 88.6 at 79.12. So last night we went neutral and we said, look, if this is going to breach or give us the rebound, this would be the spot to look for it. Look for a break back above 79.50 to give us sort of the charge. I wouldn't be playing the long side here personally, just because it is a very risk sensitive pair, as you always hear people talk about. And we did have a pretty dramatic sell off in equity. So I'm a little skittish on that, but it would have actually been a decent long position. My point being, at this juncture right now, look where we're testing. So this is a very non-traditional 70% line, but the reason I highlighted it was because it was the actual high that caught this pip here. And back here, you saw really nice pivots, and here was the break yesterday with an outside reversal day, back off that 618 that drove us lower. Okay, so this is still the spot that we just talked about. I don't know what to do here with Aussie yen. I wanted to highlight a neutral stance yesterday because that was the last target. And if you were gutsy, the break back above 79.50 has charged the move, but I just wouldn't get too aggressive on it. Immediately, I'd be looking for 80.25 weekly open resistance. And we'll see how we react there. But certainly the reaction that we got off that level on building divergence, price action to the lower low, the oscillator, no new registered lows, was a cautionary point to say, let's chill out here. Don't get too aggressive. So it was a nice short. And again, we highlighted this early on the drop. So there's been plenty of opportunity to play the downside. At this point, I want to take a little bit more of a neutral stance. Um, you know, again, on whole, on basic, just sort of objective. If this is the weekly opening range, you set a low, you test the highs, you break the lows, then we should be looking for a Thursday, Friday low. Just so happens that that drop took us into a basic big support that we were looking for. So I wouldn't be using an opening range strategy here as sort of justification for favoring the downside, specifically once we've had this massive drop and into structural support. I wouldn't put it past this thing. If markets still turn heavy today, you're seeing Dow Jones futures started a little heavy. Let me see what we're doing now. I think we were recovering before we ended. Yeah, so you're about 17 or just 5 points down on the S&P and about 93 on the Dow. So if we do see risk still turn pretty heavy, I wouldn't put it past this thing to drop into 78, 87, the low day close for the year, just for a gut check before finding a little bit more of a substantiated rebound. But one I'll be watching closely. Haven't had any positions since the shorts. Okay, let's clean this up for a second, shall we? We'll leave that 786 there. Okay, on the objective analysis, on the objective, touch of this being a trigger break that takes to the upside, validating a near-term low in price, you want to take a retracement. Two, three, six. Okay, 38.2. Nice, I'll take that. 50. And 618 is huge. Okay, and that 618 is the larger 618 from the 2016 advance, so we'll leave that as well. Getting kind of messy here, so let's do this. I've watched this whole range, to be honest with you. Watch this, okay? Watch this whole range. This is your weekly open resistance in the 38.2 retracement. It converges on this 50, on this, was this the 50? Yes, it converges on that 50 line, okay, on the advance. So that's the breakout target that would suggest that a more concrete, more significant low is in place. Basically your near-term bearish invalidation level. Immediate targets 80, 57, 80, 76, real near term. But the next major level, 618, that converges right along the actual median line. Does that make sense? Dagon says, could we look to short this at some point soon? You just answered my question. Okay. Cheers. You know, it might be a decent failure here, to be quite frank with you, Dagon. But even if the nature of the decline, it's real hard justifying getting in again. You know, we've been trying to play this short. We've been enjoying it ever since that outside day reversal off of the median line for the broader structure. Really clear there. But I'd be hard pressed to get back in again trying to short this from here. Okay, that is Aussie yen, an interesting cross. Obviously, we've been following all week, and in light of the recent equity sell-off, we're going to continue to track that one closely. Next up is dollar CAD. That'll be number 5. Quick look at the loonie. This thing just pissed me off so much. I really don't know what to do with it, guys. I'm not going to encourage any kind of bias here. This is as sketchy as it gets, and let me tell you what we've been looking at. I don't know why that's there. Is this. Look, I wanted to see this hold. What the hell is that? Is that a break? We closed above it. So if we're working on a close basis, then yeah. What the hell is this? Is that a break? We closed above it. So technically speaking, yeah. But, you know, here we are ducking back below. You have the 100-day moving average, the upper median line parallel, upslope resistance. This is the 618 of that slope. Decent pivots on both sides on the way up, resistance on the way down. Support, kind of messy here. That converges also with the 100-day moving average. On the near-term front, here's what it looks like. You know, it's as contentious as you can get. Now, we did highlight, actually, interestingly enough, 3067, excuse me, as a level of interest right here. And this is just that pivot. Oddly enough, that was the actual like touch high here. That was the pivot from back here. This takes, sometimes it pays guys to go back in price action and look at where, you know, we don't need to have a necessary fib retracement or a slope. Sometimes market gradient just give you key pivots in price. So that basically caught the high so far. So is this a false break scenario? Would we want to fade it? Dollar's weakening, right? Yesterday you saw the dollar sell off hard against all those major currencies, but look what happened with dollar CAD. Now, some people are saying this could be happening because of CAD weakness and stoked by weakness in crude prices, but now we're just, I feel like that's just grasping for straws and people looking for excuses. Who cares why? Basically, price has broken or is tempting a break of downslope resistance. So I personally, again, this is just my opinion, would like to see this fail, but we've gotten stung too many times on dollar CAD for me to try to fight this again. You know, even the first target, this son of a gun, even the first target, we were talking about 129.23, it couldn't even hit. Couldn't even hit. The low was 129.26. Like, come on. So I think we have to wait and sit this one out. New levels would just dictate moving just the retracement from that high to the new high just registered. But this turns into a low conviction trade for me at this point. Again, gunshot approach. If you put a pistol to my head, I still would want to be short. But, you know, it's a tough one. Obviously, of course, as I capitulate and say that I give up, it's probably when this thing is going to start to move hardest. But it's just very contentious at this level. Ideal scenario, again, we settle back below this upper parallel. It's the break below 29.40 at this point, or 29.60 at this point, 29.59. That would at least shift the focus back to the downside. And here's your weekly open. Let's just leave that there as well. Questions on dollar CAD. It's not the prettiest chart. And here's the weekly, guys. Just, I mean, you have it on the charts, but here, just to let you know, we weren't surprised to see the rebound because last week came into a pretty sweet spot. Basic slope resistance off the 2016 highs, two touch, breach, acceleration, test of support. We also had the 52-week moving average there. So not surprising to see the rebound. We wanted to see a hold back below that what is that, the 200-week moving average. Here's the pull. So, it could go a little higher. I don't want to see it do that, but this is one of the reasons that I'm a little bit more hesitant here. The high week reversal close for the year is 31.30. I don't want to see it go there, but if it did, wouldn't necessarily, invalidate anything. So want to be short, don't have the guts to get in just yet, but looking for some sort of more failure. And if this is an objective weekly opening range break to the upside, well, that suggests that we could still push into a Friday high. I don't know. Kind of pissed that I missed the move, but we'll have to see if we can get one back in. 31.30. If we get to 31.30, that high, yeah, I think that would be a decent spot to look for exhaustion. Digon. He says, would it be a good place to short? It'd be a place I'd be looking for exhaustion for a short, yeah. Again, that's the last level of support or hope, rather, let's say that, for the CAD. If we get through that, it basically validates the breakout of this formation. And at that point, you're looking back at like 33.70. So a 131.30 touch for a reversal trade would be really nice. I just don't, I don't know if we get all the way up there. Yes, now you're thinking right. And a break and retest. So a break and retest of 131.30 would be as bullish as it gets. That would be the confirmation for a long side approach back to slope. Basic trendline resistance off the yearly high. And we got to adjust this actually too. And that would target 31.55. Ooh, that's problematic. Well, that's interesting. It's something I'd be watching. Well, that actually fits with slope better too. Open that up. Digon. Open that up. 31.30 and 31.55, 15 pip range or 25 pip range. That 618 is pretty interesting there, right? On where we are in slope. So if we do break higher, that's something I'd be watching. I'll give you an update on today's intraday report. That's interesting. You got me looking at this for now. Okay. So that's dollar CAD. Tentatively, again, I'd love to see this thing hold and start to fail, but we don't have enough conviction to jump in from here just yet. Dagon says, looks nice. Nice. Cheers, mate. Yeah, let's continue to go on here. Sterling dollar and, well, let's go through all the sterling crosses. Sterling dollar, sterling Kiwi, sterling Aussie. That'll be number 6, 7, and 8. Here's what it looks like. First, we go to the pound. So for the pound, my loving pound, I've been talking about this trade for a while. You guys know where we've been on the sterling. It's been a very tough call to look to favor the long side. We're certainly standing outside the realm of the crowd there, but it's been working pretty nice. Look, the weekly chart's pretty ugly. I haven't been highlighting this too often because the slopes have just kind of been a mess since we broke back above. But long story short, just wanted to highlight some basic stuff. 38.2 retracement of the 2018 range converges on the late December low. That's 33 into 33.17. Last month's high was 32.99. Was that right? Yeah, 32.99. So this whole region, okay, basically a 40 pip region, 32.99 or 32.90 into 33.17. Big resistance on the weekly chart. Big resistance. Now we're testing a trigger break. It's only a 2-point touch, but it's been something we've been watching for a while. And we want to see a weekly close materialize there to give us a little bit more conviction that this low is more significant as we had first guessed. So here's, or suggested, here's the daily chart for sterling. Okay, there's the false break of the downside of the descending channel, or descending pitchfork formation. As we always say, typically if it's going to be a break to the downside of a descending formation, typically this should things should really ramp up here with a straight, more significant decline. Didn't happen, right? Didn't happen. We got the recovery back above 30 and the recovery back within the formation. Here's the 38.2 of the pitchfork, catching resistance, pullback. Again, slope, acceleration, acceleration, support with basic slope support. Here's the breach. We were looking for this recovery to the upside. The first levels we were looking for is 31.55, 31.65. I think what I noted, that's also that upper 38.2 line. Just like the lower 38.2 line offered some really nice resistance, breach. The upper 38.2 line resistance, this looks like a continued breakout. 33.18 into 122.90 or 132.90 is the level to watch, okay, on the upside for the daily chart, bigger levels. Also noting that momentum, right, didn't even make it down into 40 before rebounding. Continues to suggest that we're seeing a change in behavior in the momentum profile for the first time since the yearly highs, right? Break into oversold, resistance ahead of 50, break into oversold. This was the first shift that you saw where momentum went all the way into the 70 threshold. On the pullback, what you want to see, support ahead of 40, and that's what we got. Loving it. Loving it. Here's sterling on the intraday. And here's what we look like last night, or earlier in the week, rather. Boom. Okay. So 31.22, 31.55, 31.65. As I noted, this was the level to beat, to validate the week, or the breakout rather. Here's the move, and I'm not sure why I have an extra pitchfork here for some reason. There we go. But yeah, here's the breakout. We're still going. So for all intents and purposes, I just want to show you this. I mean, it is the 11th of the month, but here's your opening range for the month. You set a high, you set a low, you test the opening range high for the month, and it holds, in my opinion. That's a pullback and break. That suggests we should be looking for a late month high. Here's the weekly opening range. Weekly opening range sets a low. We try to test the weekly open resistance. It holds. Weekly opening range low is tested again. Break takes you through. Weekly opening range high. You look for a Thursday, Friday high, right? Now, at this point, you're getting a little tired. Okay, momentum did show resistance on this last move higher, or did show divergence on this 2-hour chart. Price action making a higher high. Remember, always look at the closes. Doesn't matter on the wicks. Higher high in the oscillator. Equal highs, or higher high in price, equal highs in the oscillator. and it looks like it's vulnerable for a little bit of a pullback. So if you're holding long positions, 31 or 32.13 was the level that we noted. That was the level you should have taken some profits at. If you're looking for something new, there's nothing to do new here on the long side, period. Okay, I'd hold. Is there a divergence? Did I miss that question, Digon? Did I answer that? I just saw your question there now. Was that the divergence I was pointing out? Let me know if that was it. But he says just answered. Okay. So what was I going to say? I lost my train of thought. Sorry about that. So yeah, if you're looking for new exposure, on a pullback, 31.55 into 31.22, both of these levels would be areas I'd be looking for exhaustion. Ideally here, based on just slope. So you get a drop into this level, sort of look to fade weakness there, with 31.22 being my near-term sort of level I don't want to see broken. This is also your weekly open, comes in just pips below. Here's the weekly open at 31.15. So that's sort of a near-term bullish inval at this point. Top side levels 32.90. Okay, it's also the June open. Stop traffic. Oh, damn, look at that. And the December low. So 33.02, 32.90. And again, obviously that big level just beyond that is going to be that 33 handle. This is not on the chart, so let's go ahead and add it here. There you go. Pretty big stuff. Bear with me. I just want to see what this extension looks like. Interesting. Huh. Okay, add some color there. Further suggests or further highlights the risk for a near-term exhaustion. That'd be your first level of support. Bullish inval, topside break, you know the levels. And listen, when we have these levels here, guys, if this does material into a topside break, I would just be taking a little bit off here, because remember, the upside break of an ascending formation should be a pretty steep rally if we get it. So I don't want you to necessarily bail out of the whole position if you see that break there, but definitely something to take a little off. If not, move your protective stops up. These two are your levels of possible reentry if we do get some sort of corrective pullback. Does that help? Does that make sense, guys, for pound dollar? Really nice. Second highest performer versus the dollar heading into the U.S. trade session. So pound is doing its nice moves here. Topside break will be a 2-hour close. Oh, to validate? No. So if you wait the 2-hour close, Mohammed, you'll miss the entire move. We want to jump into much near-term price action, like a 10-minute or even a 15-minute close above. Look, you don't want to. Let me just take one thing. The way you're saying it, or the way you're asking that question, is making me think you're trying to buy the breakout. We don't want to trade like that, Mohammed, because you're not putting yourself at a better scenario. If you buy the breakout, where are you going to put your stop? Right? So the 2-hour close would validate, not even a 2-hour close, a 60-minute close, in my opinion, would validate the breakout, but that's not going to prompt a move, right? Your move is to either wait for the pullback here, look for exhaustion at one of these two levels to get long, or if we breach, maybe we breach into here, we pull back, we'll want to see slope resistance hold the support. That would be an entry for the move higher. But if we break, if you're buying the breakout, you're putting yourself at a disadvantage, right? Because there's no respectable place to put a stop. So we have to always garner a little bit more, a little bit more caution when we're trying to play those breakouts. So I hope that adds some color, Mohammed. All right, that is sterling dollar. So there's been a couple of setups across the sterling that all look very decent, including sterling key. And this was an interesting one that we had highlighted earlier. Who was asking about this, Peter? Was that you? Yeah. He says, is support still same level as before, or have they moved up? So this is what I was looking at with Sterling Key. Here's what we were looking at earlier in the week. So the basic premise of the trade, or the first thing that highlighted it or brought it to my attention, was the weekly break. Here's Sterling Kiwi on the weekly chart. Okay, this is a big level. So there's a couple things at play here. Since the 2017 November high, we've been in consolidation, right? Series of higher lows, a series of lower highs. And then we saw this break in September. I've been out, I missed this whole thing. I was in the hospital, but there was the breakout and the pullback, testing last year's high week reversal close, or it wasn't reversal, but a high week close, which so far this year hadn't been broken on a weekly close till here. So we broke out, held that as support, and here's the subsequent breakout. Ultimately, I think there's a lot of upside room. Objectively, this is a break of the yearly opening range, which would have us looking for a late year fourth quarter high. And we've broken back above the long 200-week moving average. Okay, so there's so many things with this move that have been sort of validated and crossed out. Here's the breakout. So this is the weekly chart. We can still see a little bit more chop. Even if we get 2 or 3 weeks to the downside, there's still plenty of room, right? Big longer term target, 209.80 into 210.11, 50% retracement of the 2015 decline. And this is the measured move of the triangle breakout. So if this is a triangle wedge formation, a measured move of that side of the breadth or the magnitude, the range of the consolidation targets 209.82. So long picture, right? Way long picture. No, Mohammed, don't even say that. There's no question that you can't ask in here, sir. Feel more than welcome. Just trying to learn, that's the best way. I'd rather answer your question in a learning process. No worries at all. Okay? Cheers, mate. No apologies necessary. So here's Sterling Kiwi on the daily chart. And this is what prompted my attention to it. A near-term slope off the lows that we made back in June, the subsequent high in July, the subsequent low in August. This has been pretty clean. Median line resistance, breach, acceleration, break, acceleration, resistance, break, acceleration, upper parallel, divergence. Weak divergence, but divergence nonetheless, right? There's a lot happening here. These two reference points alone are divergence. And again, easier way to identify that, higher high, lower high. Again, above 70, so a weak signal. But even if you take a longer approach step and just take a look back, look at this high and this high. Higher high in price, lower high in the oscillator. So on a more medium-term breath, a near-term breath, there's divergence all over. And price is testing resistance. So it's worth it to look for exhaustion. Now, here's, again, this is the daily chart, right? Here's the intraday. Here's the open of the week, and here's what we had highlighted earlier this week. Oops, did I just close it? Yeah, I just closed it. It was the last one here. Here it is. And here's what we look like on the chart earlier in the week. April 2016 low day close comes in at 204.10. You have the upper parallel just higher, and we basically want to fade rallies while below this. Now, you were asking Peter earlier before the webinar started on the pullback for Sterling Key, is support still at the same levels as before, or have they moved up? So what I wanted to highlight for you was weekly trend support just within the confines of price action since the start of the week. Has this, like I said, somewhere around 203, right? I think that's what I just wrote you. Looks like you're getting a little bit of bounce there now. The second level is the same that we had highlighted in the report earlier this week, and that's with the upper 50 line. So sometimes I call this the upper 50 line, guys. You can also, Jamie sometimes refer to it as the 75% line. This is the 25% line. Sometimes you can call them upper and lower 50 lines, whatever. It's been decent. Here's the level here: resistance, resistance, resistance. The break charged the rally into the upper parallel. There's a tag of the upper parallel on divergence. Break of that 50 line would open up a larger decline towards the median line. Okay, not too much momentum, not too much of a range type of play in this one so far this week. It's been pretty tight, but that's sort of the game plan. Here's the 60-minute. By the way, if we break the upside on this one, Peter, there's a lot of room. 206.90, just the first target. You're basically looking for a rally into 210 at that point. But near term, below that upper parallel, I do think it's at risk. This is way too early, guys. I just am curious to see how this looks. Interesting. That's my idea, Dagon. He says there are some good opportunities going either way. Do you think on Sterling Kiwi? Yeah. So we look to fade. So this is one of those levels where we'll know on the reaction again pretty quick. I do think the risk is for a fade while below that upper parallel, like I said. But if we break that upper parallel, also that's going to be an accelerated rally. I think at that point you're gonna, I don't know, it'd be hard to actually get into a position there. It'll run, but it's going to be a pretty nice move. So as a disclaimer, Peter, I don't have anything on this one. I know I highlighted in the report a couple of days ago, but it's been the short was really the best play. This move here obviously is kind of like wee morning hours in the US, so I didn't get to see this, but this was a nice move back into the parallel, and again another move lower. So the move on that would have been exit at that basic trend line, stops at break even at this point. Hoping for a drop, like I said, into the 50 line. That'd be sort of the ideal scenario. And we want to see resistance basically hold here. So this might be a nice opportunity for a fade. Peter, if we get for a rally into here, for example, stop against a high, might be a move to the downside. But you just want to be cautious on this one. I think not so much sterling weakness for the pullback, but maybe a recovery in Kiwi. Make sense? Yes. All right, Peter. Cheers, mate. So that's pound Kiwi. Last but not least, pound Aussie. Another sterling cross we've been covering all week long. This one has been a little bit messier, which is why I haven't really been focused on it in the near term. I've been really scoping out pound Kiwi. This one's been all over my head. Here's pound Oz earlier in the week. So ahead of this drop, or obviously the previous day for pound Aussie, we had noted into the weekly open that we were looking for a pullback, right? Really nice move. We came right into resistance here into the start of the week. We were looking for maybe a stretch into here or here for a pullback, but you're basically looking for exhaustion. It was an oversold for a long period of time. We're testing the upper parallel. So you have the larger scope for this parallel back here in red and the current operative slope just off this low from September, really giving us some near-term resistance here. So I wanted to see a move lower. We got a move lower here, a little bit of a rebound. Still thought we could get a drag towards that 50 line, if not the lower parallel. Ever since then, it's been sort of a seesaw ride and broke right through the highs, went to the 618, and now we're still holding that same position. So here it is. Nice move to the median line, eventually panned out, and we did finally get a tag of the lower 50 line. Okay, now it took a little bit longer than expected. I don't think I've moved the marker here for this week yet. Sorry about that, guys. Oh, was that right? I'm sorry, that was right. Yeah, this is right. I'm sorry. So this is your weekly open. We did get that drag to the 50 line. Here's the rally, and there's the tag of the upper parallel. I'm just saying, why does this look so weird? It's because we were still in the 60-minute chart. Okay, so just a quick update to where the chart stands in comparison to here. This is the 120. Let me bring you the 120. It looks exactly the same. Okay, so we're right here. Pulled it back, never made it to 84.21. We turned 84.35. But we still did get a tag. And this is why, guys, I try to give you as many updates as I can, and we always have to take into account the time decay, right? So the whole point of this was that low on Friday converged on the 50 line. You still got the 50 line tag, but because it took a little bit longer, it didn't necessarily materialize at 84.21. We got the tag of the 50 line, which is what we want to see. Here's the break, 87.19. So from here, you want to stay basically constructive above the 50 line again. I would bring bullish invalidation up to the weekly. I bring it back to the initial range highs for the year. And bring it up to those March highs, 85, 85.08, 85.09. This is still a huge region, major resistance. You have basic parallel resistance, channel resistance, the 50 line, and that 618 retracement. So this is pretty big. This is pretty big. And again, if we do materialize into a pullback, I would necessarily not think it would be pound weakness per se, but maybe Aussie finally gets a little bit of a recovery. Aussie's gotten slaughtered, so has Kiwi. So a good way to be able to play recovery there without necessarily getting involved with the dollar, I think, is still on these sterling crosses. They look pretty interesting. Anyone involved in sterling Aussie? Okay, a quick rebound on commodity block. Ooh, we are over on time. Wow. Okay, let me just go through this real quick then. Gold has been very clean. We're checking resistance now. We've been bullish on gold for a while. We started talking about this early in the month, saying we have a very nice monthly opening range below resistance. 1215 is still the line we need to get through on a closed basis to validate that this was a more significant low that we made in August, and also to validate the break of the 2018 downtrend resistance. So real critical time for gold here, guys. Looks good with the dollar correction that we're seeing. Not surprised to see gold strength. If the markets really are going to sell off, and certainly we are seeing that equity markets into the open are trading lower. So Dow's down 100 points. You're about 7 points down. SPX, Nasdaq down almost flat on the session. So we're recouping some of those losses at this point. But point being is if volatility increases deeper into the start of fourth quarter, you're getting those concerns and Trump talking about it's crazy if the Fed is moving on rates. All of these is going to help gold, guys. So let it snow for all I care. 1215, 1214 is the break that we need to validate the breakout. I do think you get it. Might not be on this stretch. So we still haven't necessarily broken above the monthly opening range on a closed basis, but certainly 1215 break would be the onset of a larger rally in gold. Here's what the near-term charts look like, unchanged from the levels that we had highlighted earlier in the week. So here's the gold update, right? Really clean, guys. We broke that 50 line, but look where we dropped and found support. Right at the lower parallel, right at that former downslope resistance, offered some support. Here's the breach. This is a textbook play. 1215, 1214 is what we need to see to validate the break. And this was the cleanest move of all the commodities this week, guys. Literally, break of near-term upslope support. You saw a drop into key support, lower parallel, and here we are going for the median line. So this is big. This is big. Okay, this is big. I still favor fading weakness in gold prices. At this point, we're gonna bring up your bullish opening range to the October open. If we make it back below 1191, guys, that to me would be sort of an indication that we're failure essentially at downslope resistance. Room for a small pullback, yeah. Dagon, I'd say so. I wouldn't play it. I'd be looking to find entry for a long on that pullback. That's just my humble opinion. And you're talking to a guy who's more than happy taking counter trend trades. But on this one, I don't think there's going to be a lot of forgiveness because so many people and their mothers are all bearish gold that when it breaks out, I don't necessarily think we'll get too much back and forth. But yeah, that's gold. Crude prices, I have to just cover this with you real quick as well because this is making headlines. We did see a break of the upslope channel that we were watching. Looking for a drop near 71.14, maybe even lower. The 50% comes in a little bit higher there. So sort of this range is what I'd be looking for. Right here, 70-60s into 71 be the first area of major support I'd be looking for, but it's been a pretty precipitous drop. One other level of interest would be the 100% extension. Let me bring that here as well. I'd focus on that. 71.14, 71.40 is your initial area of support to watch for. All right. So crude is still in a broad uptrend, guys. This is, again, still just a correction off major resistance and fresh yearly highs. That's 9, 10. Anyone have any questions on Euro Yen before I wrap this up? Here's Euro Yen real quick. I just wanted to highlight this because we were talking about it in the webinars. We did rebound off support. 129.30 into 129 was basic support that we're talking about. So nothing here that's major, but I just wanted to highlight it because you're seeing both the Euro and the Yen move today on their own. So you're seeing some back and forth action here. I'd still think you get a larger rebound off this zone, so watch that support section. And real quick on the SPX, just because we've been following it and the levels are ridiculously clean, looking for some support here on the SPX. Why? Look at this level. This is the 2016 parallel of the same pitchfork we've been following since 2015. A sliding parallel of that same pitchfork in red, caught support, caught support. We talked about this yesterday, converged on the 200-day moving average. Not surprised that we're seeing a little bit of a rebound here. So look, guys, downside break of a descending formation, typically the strongest part of the move. Seeing is believing, okay? But I'd use any caution on the short side of risk today because if we're going to get a rebound, this is where you'd want to see that first rebound come into play, okay? All right, guys, I got to wrap it up there. Thank you so much for joining us. Have a great weekend. I will see you on Monday on the Daily FX free session. There's not much data into the close of the week, but definitely keep your eyes peeled with this sell-off and risk. If anything, dollar continues to be in the confines of that nice descending move. Let's continue to track that. You too, Eman, Ty, Dagon. Have a great weekend, guys. I'll see you on Monday. Cheers.